Well, welcome to our third Quantacast, a bit of a special edition today. We've got Stacey Jones, our CEO, and it's great to have you back, Stacey. Walked into the office this morning and thought Stacey was looking sensational, so we'll get her on camera. And then we've got Chris, can't say the same for Chris, but Chris Carrigan, our Head of Property Investments, is with us again today. So we've got a little bit to talk about in relation to an acquisition that we're well and truly down the track on. I won't hesitate, Chris, on a slow approach to this. So let's get into it. 157 Ann Street in the Brisbane CBD has created a lot of hype for our investors and definitely a lot of hype in the market. So over to you. What's all of this hype about this particular asset about?
It's a process that has gone really well. We didn't expect it to turn out the way it has, and it's been surprised us on the favourably on the upside. We went to inspect a 50% vacant building, 157 Ann, which usually doesn't work well for a syndication.
No.
You can't really distribute income on 50% vacant. Upon inspection, we realised that the vacant areas were really suitable to a tenant we knew was in the market. So we went and in 3 days signed a heads of agreement for a tenant to take that space, and then we bid on a 50% vacant building with a tenant to take out 85% of the vacancy. That's produced really strong distributions, really strong capital uplift, and we're out in the capital raising now. It's been a fantastic response. Over 50% in 2 business days.
Yeah.
So we're pretty keen.
Well, on our way. So, Stacey, we employed Chris to get stuck into a few things. How are you feeling about this particular property?
Oh, look, it's a fantastic outcome for us and will be for the investors. And it certainly didn't come without a whole lot of hard work from Chris. This one, I don't think we affectionately call it the boomerang, but it was one Chris worked on for some time, got very close, and it was just out of reach, and it came back to us. So very fortunate to get a run at it, and it's been so well received by investors. We thought it would be. The metrics are such that how can it not be well received? But to the extent that it has been, I'm not sure any of us really anticipated that. So it's been fantastic. Yeah,
it's been definitely an overwhelming response to in interest from the investors so far, which is fantastic. Stacey, just while we've got you, can you just explain to the audience what's happening in terms of the trust structure with this particular asset, because it is slightly different than things we've done recently?
Yes, so this one is a single asset closed-ended trust, so fixed life of 7 years. Chris can talk more to the investment strategy being around 3 to 5 year disposal plan, but it'll be the one asset in this trust. So when this asset is sold, funds will be returned to investors and the trust will be wound up.
Great. Okay, I think that our investors have been crying out for a little bit of that as well. It's a little bit more certainty about when you can get your money and when you can get your money out. So, Chris, we haven't actually put out there, I suppose, unless the people who listen to the Quantacast or view it have already seen the IM, etc. But we've been out since last Friday, and it's the Tuesday of the following week. Can you maybe talk to the specifics of what the returns are on this particular acquisition and investment?
Yeah, absolutely. So we're buying the property for $39 million. And that is the price that the market valued the property at. We're supported by underbidders at that price for a 50% vacant building. We've got a valuation on completion that once we put this new tenant in, that the value of the property has been assessed by the bank's valuer at over $55 million.
Right.
So
amazing.
So there's a substantial project profit, but along with that there's costs to get there. It's not all profit. We've got to spend about $8 million to do that. But then there's an 8% distribution along the way.
Mm-hmm.
So
you get the 20% uplift, on valuation on completion of getting that tenant signed and
net of the costs.
Net of the cost, yep. And then you've got your 8% on the way through. I think even maybe even hopefully more than 8% over the 5-year average.
Yeah, the 5-year average is around 8.5%,
Right.
8.3 to 8.5.
And that's the play, you think, somewhere between 3 and 5 years on that particular asset?
Yeah, we just want to extract all the value we can out of the building and then move on to the next one.
And the lease, Chris, is at I think it's a 10-year lease?
10-year lease, so
Right.
it improves the WALE from currently 1.5 years to 6 years.
Okay.
And then over the next 2 years, we'll work with the existing tenants, get them into long-term deals that work well for them and well for us. And then so the WALE should improve further beyond that. So we're maximising the income being derived from the building, increasing the WALE, and then selling it when the market conditions are right. That's going to benefit investors most.
Okay, it's all upside. So it's 13 stories.
13 levels.
Yeah, there's the levels. Should I say the bottom part is where the new tenant will take the space, and then there's a little bit of other vacancy throughout the building. What's the situation with that?
So there's 2 floors out of 13 that are vacant otherwise, and one of those has been fitted out with what's called spec suites, and hopefully we'll put into the Quantacast some images of those spec suites to
they're
show
nice
people.
to fit it out.
They're beautiful fit outs.
As well. Yeah.
Yeah, beautiful fit outs, and so that means they're there ready to go for a tenant that is typical for the Brisbane market in size of about 200 square metres.
Sure.
And they can come in, occupy straight away. We're already in due diligence talking to 2 tenants to take out the 2 fitted out tenancies. They're talking about lease commencement dates 1 month after we settle. So whereas in our model we've allowed obviously a lot longer lease up time for those tenancies. So having tenancies ready to go really helps the leasing campaign and reduces your downtime. There's one further floor which is completely vacant. It's been stripped back. We have put a deal to a tenant for that space as well. And really not every tenant wants a spec suite, and some tenants have the time to build a fit out, and particularly if they've got a peculiar usage, not that the tenant we're talking to does, it's just office space. But there's a few options there. If we lease these 2 spec suites and we haven't got commitment on the full floor, we'll go ahead and fit out that floor and repeat the spec suite strategy.
Okay. So we've got a building that was 50% vacant. We've got a tenant to take up a lot of that space, so we're very close to securing that. Then we've got some other runners on some of the other space there. So we could, in fact, if all goes to plan, have a fully leased or very close to, or if not all, property in the next sort of 12 to 18 months if things go to plan.
We're buying a property that, to be precise, is 48% occupied. We want to be selling a property that's 100% occupied.
Okay. So in terms of location of 157 Ann Street, what's the upside, do you think, around where it's located, Stacey? There's quite a bit happening around that area of the city at the moment.
Yeah, so it's really well located for those who know Brisbane. It's between Law Society House and City Hall. Yep. It's in that stretch, and opposite 180 Ann, which is the Commonwealth Bank occupied premium grade building, a couple of 100 metres down from Central Station, which of course is the main station that services the city, and very close to all the other transport hubs in terms of buses and other services. So fantastic location for staff, when officers are looking to occupy the building, but also for this tenant that we have coming in and the use that they're going to put the space to. Health and wellness.
Yep.
Yeah, so given the surrounding buildings, they'll provide a really good base for
customers and
that are going to service that building. So, fantastic spot.
Okay, good. So, Chris, what are some of the other benefits at 157 Ann Street?
Yeah, great building, Tim. There's great tenant mix, mostly a mix of financial services, consultancy businesses. We're really happy to be working with those tenants, and they're a group that we're very comfortable with. All the details of the existing tenants are in the IM for anyone who wants to have a look. Great views, great car parking, great amenity. It's very close to Queen Street Mall, very close to Central Railway Station. Super convenient for employees to access and work at. The prior owners of the buildings, and I don't mean just the last owner, but incredible amounts of capex has been spent on this building by prior owners. The vendor of this property spent $8 million on refurbishing the building, foyers, amenities, on-floor amenities, lifts, and the services in the building, so air conditioning, lift motors and the like. And it presents exceptionally well. So with a very prominent, this prominent new tenant that we're putting in, it's really their flagship for Brisbane. It's going to the whole building's just going to be, have a new lease of life and be very recognisable, very impressive.
Okay. Outside of the capital raising that's gone exceptionally well, Chris, where are we up to with the overall transaction?
Yeah, so there's a few things to tick off. We're in due diligence now, and we do all the usual investigations that you would for an acquisition of this type, which is building fabric and services and the lease reviews and the town planning and so on and so forth. But in this instance, we've got some critical assumptions about how much our Lessors Works package is going to cost the tenant, and we've got to make sure that for the amount we've allowed in our model, that we can deliver the tenancy for the tenant for that amount. So that's a very key one. That's a lot of design and a lot of structure in that. And so we're doing that sort of simultaneously as part of the due diligence. But if any of either the due diligence or if anything doesn't align with our purchase model, and it's not something we can live with, we don't proceed with the transaction.
Yep.
I think importantly on that point too is normally we would do those. We would finish our due diligence before we would commence the raise process, so that there was no inconvenience to investors in the event that we found an issue. Timing on this transaction is such that we just can't do that. So in order to make sure that we get everything done in time, we're running things concurrently.
Yep.
So this one works a little bit differently to ones in the past for that reason.
Okay, that makes sense. Thank you, Chris, for being on the Quantacast again today.
Thanks, Tim.
And thank you, Stacey, for being here also. Applications will close on the 5th of September for this particular investment. You can jump onto our website at quantainvest.com.au. We've got a link at the top of the page that sends you down to our IM and other information about this investment. Look, based on the response we've had so far, there's a possibility we will oversubscribe on this particular asset and fund. So if you're interested, jump on now. Our new investors, we know there's a little bit more to do when you get into our portal. It is still pretty straightforward. But if you need any assistance, pop a phone call into our office and we'll get back to you right away and help you work through that process as well. We look forward to talking with you about other investments, and thanks for watching today.